markets.
Hello, everybody, and welcome to Schwab Live Daily. Our next topic today is our daily edition of Charting the Markets. My name is Lee Bowl, and I'm a trading services manager with Charles Schwab out here in California. With me today, as usual, on Thursdays is my friend, trading colleague, and director of Charles Schwab Futures, Mike Zaremski in Chicago. Morning, Mike.
Good morning, Lee. It's been a rather kind of quiet week so far in the equity markets, but maybe tomorrow's quadruple witching there will spur a little action to end the week.
Hopefully. All right, let's get right to it. You can send in your questions in the Q&A functionality underneath the presentation window. Your questions are private, will only be seen by Mike and myself. We'll keep our eye on them and make it as interactive as possible, but we can't always get to all questions due to the number of people on these sessions. We also have our usual written disclosures. We're required to show everything we talk about is educational, informational in nature only. Nothing is a trading recommendation. Any expressions of opinion that either of us make can change at any time based on market conditions. We look at a lot of charts, but Schwab doesn't recommend the use of technical analysis as your sole means of investment research. We evaluate markets and sectors with ETFs and ETNs. If you can trade those products, they'll read a prospectus. We have Mike on today. Obviously, you'll be looking at futures contracts. If you're going to trade those, read the risk disclosure document for futures and options. And with that, I will put up the futures heat map as we review the news flow this morning. And as usual, Mike, if I screw up and forget something, just chime in.
Screw up, Lee? Never.
All right, let's start overseas. Central Bank Day overseas. Brazil Central Bank cut their rate to 2.25, which is a record low for them. They see also 2021 inflation below their target in all scenarios that they've looked at. In short, not a positive outlook for the economy down there. The same was true in Indonesia, where their central bank cut their rate by 25 basis points as expected to 4.25. They also expect to continue reducing this rate as inflation remains below target. It will also step up purchases of government bonds as well. In Switzerland, the Swiss National Bank didn't make any change to policy, but they did note that output would not be returning to pre-crisis levels anytime soon. Norway's central bank made no change to rates, which are currently pegged at 0%. Instead, it plans to stay at 0 for the next couple of years. So there is no inflation out there that they're looking at, I guess. The bigger one was Bank of England. They didn't take their rates into negative territory. There was a rumor they might do that, but they held them steady at 0.1%. However, they did add another 100 billion pounds to its quantitative easing program. So yet more central bank stimulus. So I think the common theme, if you just want to recap all that, is that emerging markets are continuing to ease, and they are more worried about outlook than maybe the developed markets. We're kind of a little less pessimistic. In other overseas news, a leading health expert from China said the recent Beijing coronavirus outbreak is under control. Of course, there's always the issue of, are they telling the truth or not? But Australia is certainly not buying that because they have just canceled all international flights through October coming into their country, except to New Zealand. And they said their country's borders altogether will be closed until 2021. On a little positive note, Hong Kong Disneyland is opening with some health restrictions, though. And overseas, European markets closed on a weaker note. Germany lost 0.8%. The FTSE, that's UK, lost 0.5%. France was down 0.8%, and the overall stock 600 declined 0.7%. Moving to domestic news, weekly jobless claims stayed above 1 million for the 13th consecutive week now. For obvious reasons. First-time claims totaled 1.5 million last week. That was higher than the analysts were expecting. The only little glimmer of good news was it was 58,000 lower than the previous week.
Right.
Yeah, we had the Philadelphia Fed Index surprised on the upside. They surprised quite a bit. They were looking for a negative 25 reading, came in at positive 27.5. We probably saw the market was a little weak yesterday in the afternoon. People are listening to Jeremy Grantham. He's widely followed. He manages $118 billion. And he called the top in 2000 and 2007, and he is calling a top now. Specifically, he said, my confidence is rising quite rapidly that this is, in fact, becoming the fourth bubble of my investment career. Great bubbles can go on for a long time and inflict a lot of pain, but at least I think now we know that we're in one. And asked by a CNBC interviewer, well then, given that feeling, what exposure should investors have to US stocks?
None.
That's right. He said zero. As a matter of fact, he said less than zero is not a bad idea.
Yeah, Jeremy though has never really been. I don't think ever since I started following him, I've ever seen him like bullish U.S. equities though. So
Yeah, so maybe they'll take it with a grain of salt. But he did, the market did weaken a little bit when he came out with that, I suppose. He's in the same camp as Jeffrey Gundlach, right?
yes,
Bubbling Capital. He also he said we're going to go down and test the lows. I don't see that happening, but then again, I'm not a billionaire. Anyway. All right. Anyway, it is Futures Thursday. So what do you want to put up here first, Mike?
well, since you have the cheese market up there, Lee, why don't we look at yes, there is a cheese futures market. And what Lee has up here is the August 20 cash settled cheese futures. Now, this is based off the block cheddar market. And the reason I brought up this market here is one that obviously it's in a quite a nice little bullish phase, really since the late April lows. But kind of the reason why we're seeing the cheese market in this a bullish rally here. A couple things. One of them, there's some government support programs going on in the whole dairy market. One of them is the Coronavirus Food Assistance Program, known as CPAP, that is actually buying dairy products from producers, including cheese. But we're also seeing another situation that's kind of more not government aided, though, is that we're starting to see the economy start to open up. We're starting to see more restaurants opening their doors as well too, and all of a sudden there is a increased demand for cheese. And the producers there have been they were kind of shut down there with the coronavirus situation there as well too, and they're just starting to ramp up. So we're actually seeing a demand driven market as well here, and that's why we're seeing the cheese market get to these bullish levels. The market is in actually a backwardation, so the front month futures are actually at a sharply higher price compared to the deferred futures. And this market could have a little bit of a run here as we're approaching the $2 a pound level. Going forward, though, I mean, there's a lot of questions about how long this rally can last. And right now it seems like maybe a little bit of a short squeeze as there are a lot of head selling as the market went down there. Now they're kind of scrambling to get out of their hedges as demand has increased. But at some point, if cheese prices continue at these upper levels, or if the government support programs start to level off there as well too, you may see a fairly significant drop in prices. There's some analysts talking about we may have to go down to maybe the 175 level to actually find true value should the government support levels start to wane, or if the end users there obtained enough supplies to get them through, because get them through their, the near-term demand there. So this is going to be an interesting market to watch. It's fairly thinly traded, but if you notice, we're starting to see a little bit of increased volume here as this market has generated some interest by some momentum following trading systems. So just want to bring that to people's attention that there is a cheese futures, and like a lot of those more thinly traded markets, you do get some interesting trends when they start to move. So just wanted to keep on your radar. Now let's look for something that's a little more useful. Sorry, go ahead, Lee.
No, I'm just saying, I myself didn't know there was cheese futures. Oh.
Yeah, there's a whole dairy complex. One of these days we'll get to a little more of that, but that's for future episodes here. Let's look at the silver market. Let's look at SIN 20. And I want to get your opinion here, Lee, that is this kind of maybe a little bit of a head and shoulders top forming there, at least near term? That's
It's
what it looks like to me, yeah.
Yeah, let's put in but I'm gonna put in a couple moving averages too, because since I worked this out. So yeah, well, there would be the neckline. We had the stops go off here was what I think that happened.
Right, it got down to about 17, just short of that $17 level.
But Yeah, so if it, I think maybe we could even move this down a little bit there. But certainly this would be the neckline. I think you're right, but it hasn't triggered yet, but it is
No.
showing some consolidation up here, just like you'll probably talk about gold, which seems to be in a trading range too. Well, let me put up some moving averages on here. I don't know why they
Sure.
got wiped out. So if I remember how to
Yeah.
do this on Street Smart, so we'll put that
Particularly the 200 day, because
200
that's
day,
like,
okay.
yeah, that's the one I think we're gonna kind of focus on.
All right.
So this,
So we'll change this to 200. And what color do you want it there?
I like red for the 200 day.
Okay.
Nope, didn't save it. Oh, there it is. Oh, there it is. Okay. Yep. That's the
Exponent.
exponential.
Hang
Ah,
on. Hang on. That's what
we're getting our Street Smart chart demo here as well. So
we are, and I'm
for our
failing
viewers.
miserably too. I'll tell you that. We wanted simple moving average.
Right. Yeah.
There we
Ah,
go.
there it goes. Yeah.
200. There we go. And red.
Yes.
All right. Then we're going to take off the exponential one. There we go.
Oh, took that wrong one, but that's okay. We
Took
got
off the wrong. There it is. Wait a
there
minute.
it is.
There.
We got both. Yeah.
I don't know why that's not going on.
Just click on the Lex.
There we go.
Yes.
Yay!
It is also right around where that neckline comes in. So that is going to be a key level to watch for silver. If this market closes below $17, that may confirm this pattern. And I mean, really, there's not much there till 1650, and that's only a little minor support. But this market go down to 1550 pretty quick if we don't hold above 1700. So that would be my kind of concern there. If I was long silver, not a bad time maybe to kind of tighten up those stops, because this market can get pretty volatile if you start to hit some pretty major key technical levels. On the upside, though, if we can break above that, I would say break above $18, we could have a test of the 1845 to 1850 level, and that above 18 really 45 would probably negate this potential head and shoulders pattern as well too. So market's going to kind of consolidate it here as well too. So at this point here, I'd just kind of wait for either an upside or downside breakout and kind of go with the momentum here for silver. Let's stick on the metals here. Let's look at copper real quick. HGN 20.
Well, at least I'm passing the symbol test. I do that.
Now, this market here, though, has really, even those corrections we've had there have seemed to have found buyers. So as we tested that 270 level, we had that next day pullback all the way down to almost 255, but any attempts below that have found some buying interest. You can see by those shadows there and some of those red bars we had the past earlier this week. So there's definitely buying interest as the market goes down. And even today, we're having a little weakness in the equity markets here. Copper's kind of holding its ground here as well too. So to me, we also just had just the past week or so, we had the non-commercial traders, which are normally your commodity funds, your large speculators, shifted from being slightly net short copper to net long. So they kind of waited for this entire rally to take place before they switched their position, but it's still not a very large long position. So to me, if we can get above that 265, maybe another test at 270, you might get a little more buying interest by some of those large specs adding to the existing long positions, and that could put the market up if it goes past 270. I mean, we can go 280 there without really any chart resistance in the near term. So, and especially if we start to see some better news if really China is saying they got their little outbreak there under control, and we start to see maybe even a little bit better news here in the U.S. with some of those states that have seen better outbreaks, and we continue to see the economies recover. We could see another little bit pop here in copper. Plus, we're also hearing about a lot of potential government infrastructure plans being talked about as well too. And if those actually come to fruition, there, that could also add demand for any kind of industrial metals such as copper. So I am still fairly bullish the copper market. However, if we can close below 250, that may negate here this initial upward move, and that could set up a potential test all the way down to probably that 240 to 235 zone. But yeah, right now I'm still a little bit bullish there in copper. And finally, let's go talk about the crude oil markets because we had the EIA data out yesterday. So let's look at the August crude CLQ20. And this market is really just kind of consolidated here between 35 and 40, and there really wasn't much there on either side for the EIA data on Wednesday. About 1.2 million increase in U.S. crude oil inventories. However, there was a decline in both RBOB gasoline and distillates. Moderate declines there. So that was kind of a little bit supportive, a little bit of uptick in the refinery utilization rates, but still about 20% below normal for this time of year. And the continued trend, though, that I've been watching the last several weeks is that we're seeing inventory shift away from Cushing, Oklahoma. We had another decline of 2.6 million barrels from Cushing, and that is once again taken away that situation about supply concerns. And we're seeing an increase in the strategic petroleum reserves. So both of those are overall bullish factors here for WTI crude. And like I said, the market here is a little bit of a consolidation zone. However, the uptrend is still in place, and it wouldn't surprise me to have another test of that highs we had last week, just above $40. And to me, I think we still got to fill in that chart gap that we've seen back in March as well, too, is probably your next term target. If you can fill the chart and still get some upward momentum, that 200-day moving average above 45 is probably your next major upside resistance. On the downside, a weekly close below 35, I think, would take a lot of the luster out of the bulls, and maybe we could see a test down to maybe just above 30 for the August crude. So Lee, let's turn it back to you.
All right, well, we got a couple of questions for you, and I don't know the answer to this one. Is there an ETF that encompasses cheese and or other dairy products?
Not that I am aware of for an ETF on that segment. So yeah, really, I think the futures markets are probably your only play for that sector.
All right, and then a couple of questions on the silver chart.
Okay, why is the SMA so flat? Well, that's just how it's being calculated from. That's a 200-day moving average. So if you go back for that is a good question though. Let's go back. Yeah, take a look here. Yeah, so I mean, you can see it's. Yeah, the market. We haven't made a lot of progress over the last 200 days, right? So. Right, exactly. That's kind of why. And then the question was, is that too high a shoulder on the head and shoulders? I don't think so. I mean, often it's lower or equal to the other shoulder, but it's certainly in the spirit of it, especially when you've had two highs that confirmed each other and then you sold off from it. And then sold off, right? We kind of went back, almost like a little anomaly there. For the question about Jeremy Hu, that's Jeremy Grantham of GMO. All right. Let us go and take a look at interest rates. We'll take a look at bonds here. Let's go to the bond signal first. We'll take a look at the TNX. Speaking of market that has gone flat. It has gone flat. I guess you'd have to say that was a failed breakout. I will say, if you're interested in interest rates, Kathy Jones, our fixed income analyst, came out, I think it was yesterday, with their mid-year review on bonds. So it's under Insights on Schwab.com. I'm not going to go over what she said because you can read it, but just let you know it's out there. So yeah, this is not doing much, and our trend following signal on the old TLT that we use here, it's, as I said, it's really kind of choppy, and we don't know if this is going to cross at this stage. I mean, if you were doing this, you can see our long-term trend following system does work pretty well.
So if you were following it specifically, you would have gone short the TLT in here. But as I said yesterday, at this stage, since they're so close, I would either wait for a breakout of this high or take out of these lows before I do a signal. But the true trend follower who just does it mechanically would be short right now based on the system. Okay, let us look at the stock market. So well, a little bit of a pullback. We've been all over the place today. It's been kind of quiet, as you said, Mike. We got a little pullback, trying to hold the 20-day, which is here. The 50 is pretty far away. I'd say resistance. It's right about there.
Right, just above 3,200.
Yep. So 32.30 is your resistance. Good support is down here at 29.50.
Yeah, it's like just a range bound
Yeah.
trading. Yeah, kind of
Yes, I will say that a week and a half ago, somebody on Charting the Market said we would be choppy for the next little bit. Oh, that was me. Okay.
Ah.
And we went over the reasons for all of that. We want to see our VIX signal. Yeah, our VIX signal based on Tom McClellan is still in a buy. The buy triggered right here. The way we get this signal, if you're new to charting the markets, you can set up your charts this way. It's got a pretty good track record. I showed you all the signals here for the last couple of years. I could go back further, but not too bad. Red lines are sells, green lines are buys. How do you read it? You follow the upper Bollinger Band. When it changes slope, that is your signal. But it is not the regular Bollinger Band. It is Bollinger Bands with the setting of a 50 period moving average and one standard deviation. So anyway, for what it's worth, that is still in a buy. We had a question on the VIX. Interesting, it's down a little bit today, even though markets, I guess they're looking more at the NASDAQ here. Let's look at the VXN, see what that's doing. This is more the NASDAQ VIX. Yeah, it's down too.
Down a little bit too.
Well, that makes sense because so they've been doing some hedging the last couple of days up here though, on the regular VIX, I think. Let's go. And I want to give you time to just talk about the market too. Do you see anything in there that's of interest?
Right now, no. I mean, like I said, we're really just kind of quiet. I mean, almost looks like maybe almost a little bit of maybe a little triangle starting to form here as well. So it looks like just a kind of a consolidated market. We had the nice little breakout a couple weeks ago, and now we're just kind of trying to find a nice little base here for the market. So yeah, I think it's kind of one of those where it's just going to be choppy trade, and probably kind of just it's kind of a do nothing kind of market here until we either finally break down below that support like you had there, or we start to make another run for new highs. So, and like I said, it's been really a NASDAQ driven market too. So that's really the one that's, I think people are kind of focused on now more than even the S&Ps.
Yeah, I agree. Now it is Thursday. What does that mean on Charting the Markets, Mike?
It's Sentiment Thursday, Lee.
That's right. So let's go over the sentiment figures. So smart money, dumb money is elevated. Smart money's 48, dumb money is 75. We talked about this yesterday. It had the quickest cycle from pessimism to optimism on the dumb money side. The usual rate along that takes to go from excessive pessimism to excessive optimism has been 81 days. This one has done it in 51 days. As we looked at yesterday, that does usually give you choppy returns over the next few weeks. Interestingly, this was really interesting because on Monday, Mike, we talked about the incredible lopsided small option traders just totally to the call side,
Right.
and lots of premiums. And so they are retail traders, but I think a lot of those, those are 10 lots and below. Uh, that so I thought that the American Association of Individual Investors might mirror that to a certain extent, but I think I have figured out why they're not the same. First, let me give you the AAII figures, which we gently call the mom and pop indicator here. So the bulls had a huge drop this week. Probably it was due to last Thursday's 1,800 point decline, but they dropped 10 points. That's one of the biggest weekly declines I've seen. And they are now only at 24.4% bullish. Compare that to their historical average of 38. And then the bears shot up by 10%. They're at almost 48% bears. Historical average is 30.5. So this, you would think, would be a contrarian indicator for a rally, but then you've got the the optimism of all those option traders. So I think what's going on here, this is just, having looked at this for years, the people that answer the AAII are generally middle-aged men and a little older. And I think a lot of these option traders are younger with the zero commissions. So I don't think they are reflected in this data. That's what I think is going on. I mean, we
I
just
would
had
have to agree with you there, Lee. I think you're absolutely right. Yes, I think it's kind of a generational thing we're seeing now in the markets, which is, I think, really fascinating and be an interesting trend to watch going forward too.
Yeah, and also there was the tragic news about the young fellow in Nebraska who just killed himself because.
Actually, he was out from the suburbs here in Chicago. He
Oh, he
was
was?
a University of Nebraska student. Yeah, he lived out not too far from where I live here.
Yeah, so he had quite a margin call in his Robinhood account. But that just goes to the fact that they are speculating a lot. So I think that's what's going on, and I think you nailed it. It's a generational deal. All right, let's take a look at the. We can take a look at the Nasdaq. We can take a look at the composite, but then more people are following the cues these days. Well, holding above support right now on the Nasdaq. Let's see where the 10-day moving average is. Yeah, so you could use that if you want a short-term trader to trail your stop. But right now, if you want to say this is where the action is, you put a stop somewhere under the 10-day and also under that support and just see what happens. Let us take a look at the cues themselves. And we have a question on the cues from Idaho. Is it likely to pull back? Hard to say.
Yeah.
I'm thinking maybe not so much when we look at what's moving in the sector action. We'll do that in a second. If you had even if you had a good pullback, it would only take you down to about 235, I think,
Right.
before they would attempt to rally it again.
Right. I think
So,
we had the pullback last week at the end of the week, and then you saw how quickly that got bought up. So I think maybe that was the pullback.
yeah, so so what do you do in this case as a trader? If you want to follow the trend, you'd buy a little. If you pull back to support and hold it, you buy more. But the trend is up on these guys. What else can you say? Now you can have a pullback at any time, but just looking at this chart, the pullback I don't think would be terrible. All right, let's look at the Russell. So they had been leading the last few days. We looked at some data yesterday that suggested those three big up days that we had historically has led to a little weakness in the Russell. It happens, we zoom in here. So it's interesting that it looks like it is trying to make up its mind at the 10 and 20-day moving average right now. You see that tail today went right up to the 10 and came back, and now it is flirting with the 20. So this is certainly the weakest. From what you were saying about the energy market, though, since there's a pretty good energy exposure in the Russell, maybe that's a slight positive. Now,
It could be. I mean, we have to still wait. Like I said, you're right. This market is, yeah, trying to make up its mind, like you were saying there. But if you were to be long, though, I mean, I don't think I would want to be aggressively short the Russell now, unless we took out that 50-day moving average, because that I think is the line that a lot of people are going to be watching at.
yeah. Now, you could say, we were talking about, let's take off everything here. And then let me just draw this in. So, I mean, you could say, is this a short-term head and shoulders? That would only signal that. Remember, on head and shoulders, you don't always have to have a horizontal neckline. It can have a slight tilt one way or another. And actually, if they're tilted down, it's a little bit more bearish than if it was tilted up. This would be negated, though, if we take out 1500. But so this certainly is not the strongest of the indices. I guess I would put it that way. And the back testing data we looked at yesterday suggests that this might not do a whole lot, but the chart will tell us eventually. Okay, let us look at sector action, and then we'll look at a couple of industries. So let's take a look at sector ETFs and just see what generally is moving, but then we're going to go down to the industry because there's kind of interesting industry action. So I guess based on that EIA data, you're getting a little bit of a movement in the energy stocks, right?
Right. Those are actually among the worst of the previous 2 days. So a little bit of a upward momentum's. I got that down a little too far too fast. So gives you a little bit of a, but still, yeah, just kind of a sideways here. Nothing really to get too excited about.
Yeah, I
You're
mean,
right though about the higher lows it's been making though. So
yeah, higher lows and higher highs. I mean, technical analysis 101 suggests that's not a bearish viewpoint for sure. So the other good thing about it, even if it goes sideways, a lot of these energy stocks have pretty good dividends. So let's take a look at the within the energy. Let's look at the refiners. They look a little better.
yeah, that helped that they had the drawdown in the.
Yeah. I think though, if you wanted to play the trend, you would wait for it to reestablish itself above the 20-day moving average before you nibble on the long side there. Or if it drops down and tests support and holds, that could be an entry with a stop under the 50-day, I think. Let's take a look at the exploration companies and then oil services. So kind of validating that support area, aren't we, on this one? Yeah, so there's your line in the sand on this one in the short to intermediate term, 55.40. And then let's look at oil service. Well, that's a little weaker than some of the other ones. But we did fill the gap. But I think that 144.5 is the level that you'd probably want to exceed before, if you're not in it already, before you go long. All right. What else is our sector going on today? Staples is showing a little bit of a bid, but totally range bound. Not a lot of action there.
It seems to be our trend here.
Yeah. So what is moving? Let's go. It's number one. I want to point this out. The cloud computing stocks. I've told you about this one. They are breaking out here. How would you play this? A stop under support. See what happens. The measured move is, since it was kind of a, it wasn't that big a consolidation. It's only about a point. So the measured move is only a point. But if risk under there and you get up to 22-ish, it's not too bad, but interesting. And then the other ones, we're waiting for this to break out again. These are the biotechs, the smaller biotechs. So keep your eye on this one. Could have a pretty good move on this one if it did break out. I mean, the measured move, you got really good support at what, 99. You got the 50-day and the lower bound there, and the measured move would be about 7 points. That'd be 114. That wouldn't be a bad move. Again, measured moves are just a total guess, but when you're making new highs, you got to have some guidance. Let's take a look at the IBBs, and then we'll take a look at the home builders, which have been on a tear. Similar to the smaller cap biotechs. And then these are the home builders. They're basically in an uptrend. So would you say that that was a successful test of the 20-day?
I would definitely say so. That was
Yeah. Yeah. Let's see what other industries are really moving. So it looks like we're getting a little pullback in the travel stocks. We're testing. So these are the airlines. I don't know what to think. I guess you could say, if we give it a little bit more time, is this making maybe a continuation triangle here?
you could definitely, yeah, it kind of looks like it.
Yeah, the only issue is that if you did break out, you'd break out at the tip, which is not the strongest place to break out. Kind of statistically, they give better signals if they break out 1/2 to 2/3. So this just says maybe the breakout would be kind of anemic one way or another. But I think the jury is still out of whether this is going to happen or not. Are these? I mean, they're still cutting flights, right? And they're trying to lay off people,
right?
So, I don't know. Let's take a look at. We looked at this one yesterday, which was the leader. Pulled back today a little bit, but not much. These are the video gaming stocks. I'd say you're okay on the very short term. Look at that 10-day moving average, Mike. Just
yeah, it's definitely held there very nicely, and just a little bit of a pullback today, but not much though. So
not much. No. So let's see what else is moving. The solar stocks were kind of getting a little bit of a move today, but they're kind of range bound. Watch for a breakout of these, so put them on your watch list. Yeah, so this was the one we were looking at, which had quite of a pullback today, but percentage-wise, this one is kind of thinly traded, but we still haven't. We are testing the breakout level right now on this one. This is dry shipping. I think these are based on futures contracts.
the Baltic Dry Shipping Index.
or something like that. Yeah. I don't know. Let's see what it says. Yeah. So it's a futures contract. What are the futures? Is there a futures contract on the Baltimore?
You know what? I think there is, but I don't think it's traded on the U.S. market. I think it's one of those,
Yeah.
yeah, foreign markets that there's a Baltic Dry Shipping Index futures.
Yeah. Because the index itself has come way back. So I mean, this is better news for the economy than if it was going the other way. That's for sure. So, all right. Let's see what's not moving today. Yeah, so this one is pulling back. We talked about that. Metals and
Metals and
mining.
mining.
Yeah, let's take a look at that one. See if it
And the
is violating any support or anything.
and the gold market was the other one, the gold miners.
Yeah.
No, just
It
kind of
looks like-
like consolidation. It's a
Yeah.
somewhat a similar pattern on most of these charts we're looking at.
Yeah, we're in a digestion phase here. I mean, the good news is that we're holding support on these. Let's take a look at the gold miners themselves. So this is everything. And then let us put in the gold miners. You can see I drew in the potential head and shoulders there, and we can't get back above the neckline, but it looks more neutral than bearish, doesn't it? To you? I don't know.
Yeah, right now, yeah, just getting tighter and tighter ranges here, but just like the gold, the gold market too, that's also getting this kind of tighter and tighter there. Is it just kind of losing a little bit of its upward momentum?
Yeah. See what else is moving on the downside. See if it's because sometimes you can look at these lists, and if you get a kind of a down day like on that BDRI and BDRY, and you haven't broken support, you can get an entry out of it. Let's see. Yeah, so silver is weak. Steel is a little weak. Home builders we saw aren't doing too much. This one had been on a tear, the mortgage REITs, but then they backed. Let's just take a look at that one. Well, pull back to the 20, but all these charts are kind of looking the last.
Yeah.
So it's kind of just range bound with a lot of these. I mean, the trend here is up, right? I mean, the 20-day moving average is sloped up, and it has held it. So it's not a bearish chart. It's just not screamingly bullish. So these are the mortgage REITs. Okay. Let's see what else is moving. Hmm. 3D printing. Let's go back to the ones that are moving on the upside. Yeah, I was talking about the solar stocks, right? We already looked at those. I forget.
We looked at TAN.
Yeah, we already did. Okay. And then this one also, we looked at cloud computing. So it seems that is definitely a place to look on the long side. And then let's just take a look at software in general, except I've frozen here for a second. I'm going to look at the IGV, which,
Or maybe not.
or, okay, maybe.
No, there you go.
There we go. See, this
There.
one might be breaking out. So if you just want to play momentum, cloud computing or software in general is pretty good. And with that, Mike, our time is up yet again.
Always goes fast, Lee. Always goes by fast.
It does. So coming up next here, Your colleague there in Chicago, our quantitative analyst, Adam Lynch, will talk about the 8 stock selection myths. It's very interesting webcast. And then we have Introduction to Futures Today. Is that you, Mike?
No, that'll be with Joel Schulte, derivatives trading manager, and Craig Porozinski will be doing that. But I'll be back on Monday morning with my special guest, Jeff Kilberg, the founder and CEO of KKM Finance.